The forecast for business capital spending is good in terms of the spending side, but supply shortages may limit actual deliveries. I'm Dr. Bill Connerly. I connect the dots between the economy and business decisions. Today, as part of my economic forecast, I'll be talking about the outlook for business capital spending. This may be relevant if you sell business equipment, computers, machinery, or if you're thinking about buying it, possibly if you're an investor, or you're just curious about the overall economic outlook, and this is one significant component. Orders for business capital equipment have been very strong lately. You can see the big surge. And what's going on here is there are three major drivers of business capital spending. The first is the economy, and GDP growth has been very strong. We've regained our previous level of performance, and it looks like we're going to have more. Most of the forecasts by other forecasters, as well as myself, have above average growth for GDP in the coming year and a half or so. Corporate profits are strong. So the need for new capacity is there. The other two drivers of business capital spending begin with labor. And we have a labor shortage. We economists don't like to say shortages, but wages are going up because of the tight market. We used to worry that robots would take jobs, but now we're hoping that robots will take empty positions. And in a world in which it's hard to recruit and retain workers, machinery and computers are a good alternative. And even when businesses can hire, they're having to pay higher wages. At first, 12 months ago, the labor market was tight and wages were just creeping up slowly. But in the last few months, and I'm recording this in October 2021, wages have just shot up sharply. So businesses will be looking for machinery and computers, other equipment, in order to be more efficient in their use of labor when they do have it. So the third driver of business capital spending is financing. Do you have the money? Can you come up with cash or borrow? And that's a very positive sign. Business cash holdings surged last year. A big portion of the increase was PPP, Paycheck Protection Program. Both loans and many of the loans have been forgiven, so it's just cash in company coffers. So business cash holdings are high for those companies that have to borrow. Interest rates are low. Banks are easing their credit standards after having tightened them last year. And for companies that are listed on stock exchanges, new stock issuances look pretty good. So the demand side of business capital spending will be positive because of economic growth, the tight labor market, and abundant financing. But that's the demand side. What about the supply side? Will we be able to actually get the equipment out? Right now, if you call up and you want factory automation equipment, there's probably a long lead time there. One issue is labor. The labor shortage means that the companies producing the equipment that will substitute for labor themselves have trouble getting labor. But factories have an additional challenge, and two additional challenges actually that the everyday business does not have. The first is recruiting young people. When I was in high school, a kid could graduate from high school, get a job directly in the factory. But today, and the last few decades, teachers and counselors have told people, do not go directly to work, go to college first. Well, actually, boys are not being very successful in college right now. Girls are, but not boys so much. But they're not going into factories, so they took that part of the advice. So it is very difficult for factories to get young people working there. And then the second factory problem is the silver tsunami. A lot of the mature, experienced workers in factories have hair that's about my color, the silver tsunami, and they are retiring. So businesses will have trouble getting the labor that they need to produce the machinery and computers that form part of business capital spending. And then the next problem, of course, is the supply chain issue, and we're seeing that all over. A good picture of that comes from the Institute for Supply Management. They do a survey of purchasing managers in factories, and this is the slow deliveries. A spike up in the depths of the lockdown in 2020, and now we're in a second spike there. I think that is going to improve, but slowly. And even when the supplies get there, then we have a transportation issue to get the finished product to the buyer. So what's it all mean for the economic forecast? You know, business capital spending is a small portion of GDP, but it goes up and down so much that it's actually an important component of the swings and the changes in GDP. I believe demand will be strong through 2022 and on into 2023. The limit will be actual deliveries because of labor and the supply chain challenges, but I think we will have increased shipments of business capital goods in 2022, but not quite as much as the buyers would like to have. Looking beyond that, at some point, maybe late 22, certainly sometime in 2023, the Federal Reserve will start tightening interest rates, and at that point, they are going to be discouraging some purchases of equipment by interest-sensitive buyers. I don't think that will be immediate, but at some point we're going to go through the cycle that business capital goods have always been through. But this year, 2022 and 2023 look very good. I'm Dr. Bill Connerly. I connect the dots between the economy and business. If you found this interesting, you probably want to subscribe to my monthly newsletter. If you just send a text message to 42828 with the word econ, actually it's not a word, it's an abbreviation, but type ECON and enter those digits as if it's a phone number, 42828, and you'll get my monthly newsletter. Thanks for watching. And you can subscribe to this. Hit the button. I think it's somewhere down underneath the globe. Big, bright red button. You can't miss it.